Okay, so in today's episode, I'll be teaching you how to be able to use Bybit to trade futures, right? How to be able to trade futures using your Bybit. Now, we have two ways of trading. We call it the spot trading and the futures trading. The futures trading on some other exchanges are known as derivatives, which is like totally understandable. But let me just make it easy. Futures is the easiest one for you to be able to call it. Now, let's go. Now, this is for Bybit users only. For Bybit users only. You can actually use the same knowledge when it comes to trading on um other exchanges too. But this one is for Bybit users. Now, when you open your Bybit to this interface, where you want to go to is your trade. See the middle icon below your trade. That's where you want to go to. Now, under your trade session, we have if you look up, you see the sports, you see the futures, we have the options, we have the explore, we have the convert, pre-market, spot X, P2P, trade GPT, spread trading, and the likes. But our focus for today is futures trading. Yeah, just like I mentioned earlier, futures trading is our focus for today. Now, we want to enter a trade on Bybit, a futures trade. Yeah. Now, there are three things you need to know before you can enter a trade on Bybit. Yeah, three things. They call it the signal. You must have your entry point, your exit point. Your exit point are two. We have the take profit and the stop loss, right? The stop loss and the take profit, then your entry point. These are the three things you need to know. You must have these figures with you before you are able to say you want to actually enter a trade. You understand what I'm saying? Now, for the entry point, you can also use the current market price, which is like something else, but let's not go into that. Because of the point of today's lesson, which is actually like dropping signal and then you being able to utilize the signal, I'll be talking about limit orders, which is what we're having here. See, we have market, we have conditional, choose whatsoever. But limit order is what we want to talk about today now. So you must have your limit price, that is your entry price, your stop loss, that is the price at which you get stepped out when the market is not going in your favor, and your take profit, which is the price at which you get stepped out after the market must have um, gotten to your profit point and then give you more profit. Then you can market will like automatically step you out of the market. You understand what I'm saying? So now this is how it works. Now for your price, this is let's take BTC for instance, right? Let's take BTC for instance. This is Bitcoin. Let's select Bitcoin for instance. Now, when it comes to Bitcoin, you want to enter a Bitcoin trade, yeah, and you want to use limit order. Now, this is leverage. You have the isolated, you have the cross, you have the portfolio, and more details. Those are new options that Bybit just added to them recently. Now, under the isolated and cross margin, we have the same method of leverage. But I always tell my students, yeah, that it's better you should use a leverage that can help you to manage your risk. If you're using a high leverage, yes, it can give you higher reward, but at the same time, it means higher loss, like huge amount of loss. Imagine, understand what I'm saying? Now, your leverage is multiplied by the amount of the movement that the market is making. This is how you know how much profit you will have and how much loss you will have. If market should move if for instance now this is Bitcoin and it's currently on 30x, that is I'm using 30 leverages. So if Bitcoin should move 1% upward in my favor, that means I'm making 30% profit. That is 1% movement of Bitcoin times the amount of leverage I'm using. That is 30 times 1. That means I'm getting 30% profit if BTC should move in my favor. But if BTC should move against my favor, yeah, if it should move against me, that means I'm getting 30% in loss. You understand what I'm saying? That means if BTC should move 3% against me, that means I'm currently losing 90% of my margin. Margin is the amount of money that you use to enter a trade. That's what I'm saying. Now we have $10 at this point now. I want to enter a trade on BTC, right? BTC current market price, this is it here, is $105,179. That's let's just stick to 105,000. That's the current price of BTC. Now I want to enter BTC. I want to enter at I want to predict that BTC will go down, right? Now, if I want to put that BTC will go down, I will tell you, I will drop a limit order for you. And for the limit order, let's say I'm predicting that BTC should first of all go to my entry order for BTC. Yeah, I'm predicting that BTC should go down. Now my entry order for BTC is 107,000, right? So 107,000 is my entry order, is my limit order for BTC. Now under this price is where I will put that figure 107,000. That is the price of which I'm expecting BTC to start moving in my favor. Now 107,000 is the limit order, is the entry point, is the entry price for BTC. Now the next one, which is order value, yeah, that one has to do with how much you want to use to stake that movement. They call it margin. Like how much did you want to risk for that trade, for that particular trade, for that single order? Now I'm using 30x, right? That means if I should say that means for every 30 I input here, that is $1, right? Now 30, that is $1. But because BT is of huge amount of money, that's why it's not showing. So let's say I want to use the whole $10 now. Yeah, I want to use the whole $10. That means I'll be using 300. Okay, I think it's more than 300 still. Okay. So this is it. Let's say 320. Oh no, let's say 310. Okay. Let's just stick to 300. So now when you input the figure here, yeah, the cost, we have quantity 0.002. That's what is bought in BTC value. Then we have cost, which is $7.23. Now that cost means out of this $10.1625, I will be charged $7.23 to be able to take this trade I want to take now. Right? Let me come again. The price above is the price of which is being set as your limit order. Right? Now, which is $107,000. Okay, sorry, there was an interruption. So as I was saying earlier, I'm saying $107,000 is the value of which I call the limit order, the entry price for BTC. Right? Don't forget, I'm predicting that BTC should come down. So then I say, what is the value? How much am I willing to stake for a trade? Right? I'm willing to stake $10. But if I should use the figure, because $10 is not actually a definite figure for BTC right now. So let's just stick to 300. Let's just say I want to use $300. I'm sorry, I want to use 300 as the order value. Now 300 is giving me 7.23. That means if I should continue with this 300, I'll be charged $7.23 from this $10 I have above to be able to actually activate this trade. Right? Now, then don't forget, I said we have TP and SL, which is your take profit and stop loss. Now, this is your TP/SL here. Then you can click forward to be able to predict the movement. Now, in a situation whereby you are predicting that the BTC should come down, you are supposed to come to short. If you are predicting that BTC should go up, that means you are going for long. It's just like instead of long, some exchanges buy. Instead of short, some exchanges sell. You understand? It's the same thing. It does not matter. Now, we are predicting for short now. Then you come for short. Then what do? You enter your take profit. What is your take profit value? Your take profit in a short scenario, in a selling scenario, your take profit should be lesser than your entry point, than your entry value. My entry value is 107,000. So what is my take profit? My take profit should be lesser than 107,000. It could be 160,000, it could be lesser, it could be higher than that. As far as it's not the same thing as 107,000 or is not more than 107,000. In a situation where you are selling, that is when you are predicting that the market should come down. Now let's say for instance, my take profit for this is 105,000, right? My take profit is 105,000 and my stop loss is your stop loss in a selling scenario has to be bigger in value than your entry point, right? Now, so let's say my stop loss now, because my entry point is 107,000, so my stop loss now is 108,000. Now, this is it. So okay, so as I was saying, so it shows that my take profit is 105,000 this, and my stop loss is 108,000. Now, this is what I'm expecting to make as profit, and this is what I'm risking. That means I'm risking $2 to make $4. Yeah. Now, The value can be different, it can be bigger, it depends on whoever is giving you the signal or whatsoever. Just make sure that you are actually following the signal like blindly. Now that is it. So now this is for a short situation. Now let's talk about a long situation. If you want to long the market using the same entry limit, yeah, that means for the long situation, we will have to be using a higher value. A higher value. Now for the higher value, it means our take profit has to be more than our limit order. Our take profit has to be more than the limit order. The limit order, don't forget, is 107,000. 107,000. Now, our take profit can be like 110,000, 115,000. That is bigger than 107,000. It could be 175,000 as far as it's bigger than 107,000. You understand? Let's say, for instance, our take profit is 115,000. So 115,000 is our take profit. And our stop loss has to be lower than the entry point, entry value, which is 107. Now, let's say our stop loss is 106,000, which is lower than 107,000. Now, it just showed me what I'm risking and what I'm hoping to get. I'm risking, I think there's a problem. Okay, no. So, my stop loss is 105,000, right? It means I'm risking $1.1, yeah, to make $18. That is, I'm risking 15% to make 268%. I don't know if you get it. In a long scenario, in a situation where you are predicting that the market should go up, yeah, your entry point has to be lower than your take profit, but your entry point has to be greater than your stop loss. But in a situation whereby you are predicting that the market should go down, your entry point has to be greater than your stop loss, sorry, than your take profit, and your entry point has to be smaller than your stop loss. It's as simple as that. So let's sort of proceed with that. Now when you click on that, then I click, sorry. So then you what you do is you click on long, like you click on long, right? Now when you click on long, the market will set your order. If it's not something that will pick immediately, it will be in the waiting. As you can see, I have some orders that are waiting for me here currently. So it will just like wait there. Once the price get to that point that where you've predicted it to be, it will automatically pick. And once it's pick, that is it. Market will just start going your way. Either going your way or you lost whatever way. If your prediction is right, then you win. If it's wrong, then you lose. So that is how it works. It's as simple as that. If there's any question, please let me know so I can address it and then let you know what's up.